All right, welcome to part 9 of this mini series, Trading Problems. So I'm looking at all the problems, but at least the ones I could come up, the most obvious ones that I could come up with, and how to solve them from a time and price perspective. So problem number 9, let's see what that is and let's move on. So here we are looking for the Holy Grail. Now, a lot of traders, when they go through a losing streak, they lose confidence in their style of trading. This is due to the lack of testing, back and forward testing. I always prefer forward testing of their strategies. If you traded with your strategy, even with a small account, you just kept on testing it and testing it, testing it. If you have a healthy profit at the end of the day, it should be kind of like up, down, but in a sloping upwards kind of slope. And every now and then it will have a dip. It happens to everyone. But when traders have a few or several losing streaks, it's because they lose confidence in their strategy, and that's because they probably don't have the enough amount of statistics under their belt. So then they're looking for new things. This is why on YouTube many videos on indicators are very popular, because everybody wants a magic pill to take, and with that miracle pill you want to solve all your trading problems and win all the time. But that's not really going to happen, because there is no holy grail, because in trading you have to bring a few things together yourself. Okay, if you're using a robot, obviously that's your prerogative and it's your choice, but I normally don't recommend it. A person should be able to look at the screen and understand what's going on according to the technical analysis knowledge they have. So looking for miracle indicators are not really going to get you anywhere. Those indicators will not work unless you have the money management, the statistics to back up that strategy, and you know what you're doing if things go pear-shaped. Also, you also need to know what to do when things are going in your favor, because there are two types of trading psychologies when you're in the middle of a trade. One is fear, the other one is greed. So before you enter the trade, you got to have a plan, and your lack of planning and your lack of proper strategy, or the confidence in your strategy, after a few losing trades will push you to look for something else. This is why you'll see a bunch of people who want to trade the markets but constantly skipping from one strategy to another, looking for all kinds of remedies. You won't find it. How can you solve this issue with time and price? Well, with time and price, we're always looking for two factors rather than just one factor. Normally, people are doing technical and fundamental analysis to look at the market. So they have a bias towards the market, they have a direction, or they have a certain strategy where they want to know, if the price gets here, I'm going to get in, I have a target, stop loss, and so on. Or if the price breaks out, I'm going to go in and I've got a target, and so on. So everybody's got some kind of a strategy that they want to use, but nobody on the internet talks about timing. When we talk about the timing, we're talking about calculating the swing hours of the day in advance. Now, if you haven't watched my previous videos, do so. I think you might find it interesting. We calculate from days in advance actually at which day the market will have a highly likely swing day, and in those days, in any trading day, Monday to Friday, what are the most likely swing hours we're going to get. Plus we've got a pricing model as well. So we have three factors here. We've got the time, the swing day, and the price all coming together. We are also completely independent of the news. We don't care about the news. Okay, so let's take a look. So on any given day, we're going to have the swing days for the week, as you can see here. Now, this is my website, globaltrader.club. This is for last week, 7th to 11th of April. And as you can see here, we've got the swing days. These were all posted in advance. In fact, I posted these on the 22nd of March. So pretty much 8-9 days before April started. And you can see in the recent posts that I've got the whole of April here all the way up to the 2nd of May. In fact, I'm working on the month of May this week, so I'll be able to finish that off as well, and then I'll be posting the whole month of May for swing days and swing hours as well. Now, if I know the swing days and the swing hours of the market for the assets that I'm trading, obviously I'm not going to be jumping around doing all kinds of strategy hopping, jumping from one tree to another. I'm going to be sticking with what works, okay? And this is the most important thing, to understand the day, the hour of the day, and the price. And when you see this working day in and day out, you'll be able to feel more confident in the strategy. Also, knowing the time and price and the swing day in advance allows you to do proper risk management. So if we were to look at any day, for example, this is gold. Now, as you can see, this week I've got all of the swing hours here for Monday, Tuesday, as you can see. And also Monday was a swing day for gold. Now you can see the on Monday market sold here. This is a trading hour. So I've got the trading hour here, as you can see. Monday was a swing day. So the market sold the high, as you can see. Now obviously we're not going to sell the lows of the day, but every time the market is up, as you can see, there's a sell reaction. Okay, so now we're waiting for the market to kind of retrace. Now remember, gold is going up, so to actually be selling when the market is going up requires some additional information, and that is your swing day, your swing hour, and your price. Okay, so seeing all these price levels, as you can see on the, let me just move my head away from there. All right, as you can see, I've got a PST indicator down here, and it has prices. The same thing for the weekly, what price to sell at, where we can target for the week. Okay, see all of these levels, they have a price target or a price value. All right, so this is a PST indicator. I've done a PST indicator video, 2 of them. You can watch them on the channel as well. I'll put a link in there somewhere. And from there, you can go to the prices as well and check the price. So 3,158 is a weekly price. If we go down, we could go down there. If we go up, what's a good price to sell on a swing day, swing hour? That's going to be 80, and that's the price of 3,275. This is on the weekly. On the daily, what should I be looking at? Well, if yesterday was a swing day, you can see the market closed low. If the market dips down again, where's a place to sell? Well, today we would be looking at this HCL1 line, which is 3,237. So then I've got 3,237, as you can see right here. Okay, and the market at a trading hour just short of that came, and as you can see, went down. So the market is very sensitive to that zone because the PST price, and if I know Monday was a swing day, if I wanted to trade it, I'd be trading it to the downside. Okay, what's the advantage of that? The advantage is your stop loss is going to be really, really tight. Now obviously, knowing all the swing days in advance, also for this week, for example, it's the 14th and the 18th of April. We're going to have swing days for everything here, these 6 assets. You can see the 3 US indices, Bitcoin, Euro, Dollar, and Gold. Those were last week, but every week we've got them. And until the 2nd of May, the week of 28th of April to the 2nd of May, I've got them all posted there. So knowing these days in advance really allows us to be stable, and it stops us from running around trying to look for all kinds of remedies, because things are not going to get any better. Knowing the highly likely swing day, the highly likely swing hour, and decent pricing, or your technical analysis pricing, that's also fine, is going to be the safest way to trade. In fact, that probably is the closest as you will get to the Holy Grail. If you think about it, let's take a look at the Euro Dollar. These yellow arrows here, as you can see, these are all the swing days that I've got. So all the time when we've got swing days, you can see the market's done a turn, it's found a top, it's found a bottom, it's found a top, a bottom, bottom, as you can see. And also you can follow it from one swing day to the next swing day. So despite the fact that we're day trading, we can also keep positions open, like on this one as well. Last week it was Tuesday, Thursday, and on Tuesday and Thursday, on both occasions, the market just shot up, as you can see, into that zone. Now this week, we're going to wait for the Euro Dollar swing day to happen, and then we'll work on it to the downside. So also going against something like this, okay, takes a lot of courage, because like standing in front of a train. But if you know the swing days, swing hours, you can take the risk and you can work on it. For example, look, this is Monday. The market, as you can see at trading hours, has pretty much sold. Here's another trading hour where the market turned around, because the trading hours are telling me when the market is highly likely to turn. So if I take the tops and the bottoms, even if I get my direction wrong, I will still have at least enough move to cover the trade, to manage the trade. So when the swing day for this comes as well, we'll be working on the swing day, swing hour, price, same here. Also, this is SB 500, same kind of thing. Yesterday I did a video on this as well, and as you can see, we've got a Monday here being a swing day. I put an up arrow. Why? Because the market came down from last Thursday, which was a swing day, and this is your Monday. So Monday was a low going into Thursday. Thursday market sells, that's Friday, and this is Monday. And with the PST breakout, we already have a bias, we know which way to go. So on the swing days, swing hours, you can trade more confidently, as you can see. All right, so that's pretty much as close as you'll get to the Holy Grail. Same with Bitcoin or anything you're trading. As you can see, I've got here a bunch of profiles, and the same methodology will work for anything. If you got the swing days for an asset, the swing hours and the pricing, your trading is much safer with minimum risk, maximum return. So stop strategy hopping. Get a strategy that works for your character and personality. Test it forward with an account. Make sure you got good stats and journal every trade so you understand under what conditions you're going into the trade, so your trading is always consistent. Once you got that, then that's it. That's your style. Obviously you can tweak it, improve it as market conditions change, or you can see if there's something better to do or something more to improve. You can still add and tweak around a little bit, but the general framework should be solid. You should have confidence in it in the first place, and then just rinse it and repeat it and just keep doing the same old, obviously with money management. But from a time and price perspective, knowing swing days in advance, knowing the swing hours in advance, you can see all the swing days here. So knowing what days are good to trade, market coming down, swing days, market going up. Why? Because we're at the lows. What do we have? A swing high. So it's a swing day, sell it off. We're at the highs, sell it off. We're at the highs, sell it off. Okay, and then you got all these swing days happening, because we're, like I said, day trading, intraday trading. All of these days here, the swing days here, are intra-week swing days. So they're not big major swings, but they're swings for trading the short term in the market. I hope that helps. Have a good day.